hello everyone, Kim here, and thank you for tuning in. If you guys are here live, thanks for coming out and hanging out with me. Today we didn't have anything scheduled today. I just want to put out this special event because last 3 days we've seen some great move from the buyers, and we're seeing this minor term cultivation of an uptrend, which that could lead to intermediate term. So we're going to talk about that. Also, if you're here watching the recording, because I'm also recording this, so if you have to go early, you can always catch the recording there. So I have a lot of time today. I don't really got much thing going, so you're feel free to ask me any questions if you have any. If you want me to look at anything, any stocks or anything like that. If you're here live, obviously. You're always welcome to use your chat on the left to talk to me there. But we're going to go through every single indices. We'll use a ETF. We'll look at Spider, Qs, Dow Jones, Diamond, semiconductor, financial sector, Russell 2000, IWM, and also transport. And then, we'll look at Apple and Tesla, Amazon, Netflix, Google if we have some time. Obviously, if you got some questions or anything like that, again, feel free to ask me about it. So we'll just kind of hang around here a little bit till people are still kind of signing on. Feel free to get something to drink or whatever. Again, I have a lot of time. I have a lot of energy today, so I can sit here and talk to you guys about the market quite some time if you'd like to. So if you have any questions, if not, we'll go through these and then we'll go from there. Welcome everyone. We haven't started it yet. We're gonna go ahead and start it soon. We're just having some more people signing on here. Again, I didn't have anything scheduled tonight, but I wanted to put out this special event, special report, or special live session so that we can talk with the market. Because it's crucial what's happening in the market right now. There's still people calling that the crash is still going to happen and stuff like that. Again, I've been talking about the correction is over. And market doesn't go straight up, and we know that. But isn't that interesting how our emotion get in the way, that even though we saw a huge move in October and we start pulling back, like that's going to go to nothing. And what the market many times generally what it's going to do is it's going to go up and it's going to pull back. We all know that, but the pullback is required, it's needed. We need that pullback. We need to embrace that pullback because that pullback is creating an uptrend. What is uptrend? Higher lows, higher highs. Market does not go straight up. So if you're looking at things intermediate term, we need that higher low to establish a strong uptrend, to cultivate, right, a healthy uptrend. Especially what we've seen, in September and August, that fast decline. We need to heal from it. And we definitely don't want to see a move that goes straight up. We definitely want to see a move that is constructive. All right, so we're going to talk about that. Again, if you're just joining now, feel free to, again, I have a lot of time to feel free to ask any questions. Again, on your left chat panel, you can always interact with me in that way. And so I'm going to share a chart here. Okay. All right, so we're looking at S&P 500 here, Spider. Looking at the daily chart. This is the same chart that we've been watching, this Fibonacci, and I have put in this Fibonacci analysis, Fibonacci retracement. You can see that I have measured this move here, and obviously nobody truly knows which level it's going to bounce off of. And obviously this was a level that we've been looking at. We talked about, if you've been following my today's market commentary videos I've been putting on, we talked about how this is a level that we must hold to be to establish intermediate term uptrend, right? So when the market see that strong bounce after this strong double bottom, we saw that decline, and then that decline was met with that double bottom reversal pattern. That neckline was broken. We closed above that. We held above that. This was when the 50 MA, 10 MA, they were crossing back over. This was the first time since that decline that 50 and 10 MA, they're starting crossing back over. So there was a crucial moment there. And then once the price action bounced from that, held here for a little bit, continue on. But obviously, the market needs to pull back because we want to cultivate intermediate term uptrend, right? What I mean by intermediate term uptrend, obviously we have like this minor term uptrend. We're looking at a daily chart here. So every single candle that you're seeing in this chart, each candle represents 1 day. So when we're looking at intermediate, I'm talking about more like something like this. So how do you understand where the intermediate term high low is going to be? You always put in this Fibonacci retracement, okay? Fibonacci retracement. These are the sequence that I use. And anywhere in this vicinity, anywhere in this level, right? If we bounce, because sometimes they're not going to perfectly respect this is the first level, but it might respect second level or third level. Is my chat thing working? Oh yes, hi Kay, if you have a chance, would you please comment on going long NAT if it breaks above the 50 DMA? Yes, we'll look at it. Let me just, I didn't see. Okay, yes, we'll do that. And we'll look at the indices first, and then I'll just put that in here. Again, if you want me to look at anything else, if you want me to look at anything else, feel free to ask. And again, I have a lot of time today. I really don't have, I have a lot of energy today as well, so I really not gonna hurry this. We're just gonna hang out and talk market, all right? So that was important, and so we bounced from it. And you're gonna find out, because I'm gonna look at every single of these indices here, and you're gonna find out that every single one of them, except Russell and the transport, they're all bouncing on that 38.2%. Every single one of them. So we bounced it. Obviously, we talked about in my last market commentary video. This was like a few days ago. That hey, we have a bullish engulfing right on that pivot level, right? This was important level because it's 38.2% retracement zone, and also this is a vicinity that has been acting as resistance and support in the past. So it's a pivot, right? It's a pivot, meaning it was support and a resistance in the past. And also it was the vicinity of 50 MA. Obviously, when you're looking at the moving averages, what you don't want to do is that you don't want, just because we got slightly below 50, that's what people get so caught up on. People are so caught up on that, well, okay, we got slightly below, we lost that 50 MA, you know what I mean? And it's when you're looking at the moving averages, don't be obsessed with that if it gets below this level. It's the vicinity that is important. The vicinity, it's the level. That's what you always hear me referring back to, like vicinity levels, right? The levels are important. Yes, we got slightly below 50 MA, but it's the level that is important because we're still working with, kind of a rising, potentially, flattening out 50 MA. And the next day, you can see that we had that candle came, gotten back above that daily 50 MA. That 50 MA was very, very important. Do you know why? Because that 50 MA was very, very strong resistance here. Okay, we came down, the dotted pink 50 MA, we came down, hit that. This was a fat minute. Didn't like what they had to say. Came down hard. Morningstar went up, came back down, retested that 50 MA. So 50 MA flipped back and became support. So then it was this vicinity that was important. It may not play out exactly right there, but it was in this vicinity that was important there. And then it was a bullish engulfing pattern. We know that any of these candlestick analysis, we need follow through, right? We need supporters coming in, supporters cause. And so what I was talking about is we're still below 1020 MA, and we need to get back above that. What I didn't say is, mark my word, it's gonna get up because I know it for sure because I'm God. That's not what I said, because there's a chance it might not gotten up there. And yesterday, you can see, yesterday what happened was, we just hover around. We were not quite able to get back above that 10 EMA. We're just kind of anticipating, right? They're like short-term sellers there, and people are watching this. Are we gonna get back above 10 EMA? Not only that, we had this gap area. Every time there's a gap area, people start to get a little bit nervous. The light blue moving average is a 30-day SMA or EMA. The light blue moving average is the thick one. The thick one is actually 100 SMA, a daily chart. This one right here is 10 EMA. So I use, if you guys are wondering what I use, and this is what I use on every single chart that I put up, every single stocks that I watch. 10, 20, 50 EMA, 100 and 200 SMA. This is same with a daily chart, weekly chart, monthly chart. All those are, that's what I use. So you can see that these moving averages here, the light blue, like a greenish, that's 20. The pink dotted is 50. And then we got the thick pink, that's 200 SMA, and thick blue, that's 100 SMA there. And those are the one I use. And again, when we're looking at this moving averages, don't be caught up on where it's at. If you got slightly below it, it's the vicinity that's important. But obviously 1020 MA, obviously there's a lot of people are watching that. Not only that, it's just got short-term sellers. They're getting in there, trying to sell at this vicinity. And then today, finally, we broke above that. Not only we broke above that, we actually filled this gap. We got above it. Today we're talking about this morning. This is a market update that I sent out to my members in video update. This was more this morning, 206.91. So it closed at 208.73. It wasn't every day. Actually, it wasn't this morning. It was like this afternoon. Where did it go? There you go. So this was this afternoon here. We talked about again. This is a 65-minute chart, and we talked about how. Are you guys seeing my chart here? Let's see. I feel like it's okay. There you go. I feel like it was frozen. Okay, never mind. So you see that this chart right here. This was an important level, right? Okay. So what we got going on here on this 65-minute chart is this is important level. So you can see that. And people always ask me like, what intraday chart do I look at? Like 10 minutes, 5 minutes. I only look at the lowest I'm gonna go is a 65 minutes or 65 minutes. That's it. I'm not gonna go 30-minute or 10-minute or 5-minute because I don't need to. It's just too erratic, and I don't even think you should watch it unless you're day trading, obviously. So 65-minute chart, daily chart, weekly chart, and monthly chart, right? So 65-minute chart, this is when you want to analyze minor term market forecast. So this was an important level. You can see that this was definitely a resistance level, definitely a strong resistance, and it was also resistant for a short time. It got above that level, came back down. We found support and buyers here. So now this resistance level becoming a pivot, which means now it's also becoming a support. So when this thing came down, we got back to this level, which is coinciding with 38.2%. Yeah, so 60-minute. Well, yeah, it's because 60. The reason I use 65-minute chart, not 60-minute, not 1 hour, is because each candles they're proportionate better in 65-minute chart. Because I think in one day is how many hours? Because market opens at 8:30. Right, so 9:30, 10:30, 11:30, 12:30, 1:30, 2:30, 3:30. So they're like 7 hours and a half or 6 hours and a half. So if you do hourly chart, right, there's a 6 hours and a half. There's the hourly chart. Then what's going to happen is one of the candles is only 30 minutes. So if so then they're not proportionate well. So you want to distribute that, well, so that each candle is well proportioned. That's why I go 65. And it's not a huge deal. You can just do hourly if you can't do it on your chart. It's not a big deal. But if you want to be like precise about it, if you're doing your candlestick analysis. right. So if you want to be super precise about that, then you want to make sure each candle is proportionate well, so that one candle is only 30 minutes. So anyway, so once we bounce from that, it was important that we clear this resistance, because you can clearly see that there were sellers here. There are sellers that we pull back, and this might have been a bull flag. And then this morning, we broke above that. So then there could be some buyers, maybe short-term buyers who wants to just get it up to about 209 or so. And this number is basically saying that if we get well above 209, that would be the level that the market potentially get back above, you know, above the new high, above this swing high there. Right now, 208.73. So this is a great work from the buyers. We are now back above 10 EMA, 20 EMA, 200 SMA, 50 EMA, and 100 SMA. We bounced at a great level that we needed to bounce. Not only that, with this cultivation that we have, now we have what we call, we can't really fit there, but we have potentially intermediate term and higher low. And that's very important to me. This is very, very important. This sequence, this right there, this low right here, right? This low is definitely higher than this low. This low is definitely higher than that low. That's very, very important when we're doing intermediate term analysis, because it means we're in an uptrend. We're in an uptrend. We're cultivation, right? So looking very, very positive. I'm very bullish in the market. I don't know if you guys seen my analysis. Dow Jones getting ready for historical breakout. I know I've been saying this, but you know, I guess I wouldn't know for sure, but I still think the market is going to get into this. Obviously, next year's election, so I mean that could shake out the market, but I'm not sure if we're going to see any kind of correct or any kind of crash, anything like that for years. We're talking 10, 15 years we could get into, you know, this long-term uptrend, this secular uptrend that we got into. Here, let's talk. Since we have a lot of time to, let's talk about that real quick. It's interesting. People like to hear about this stuff when market is doing good, but then when market doesn't do well, they don't want to hear about it. And it's just human nature of that. Like, but you know, if you want to be a really solid analyst, when the market is bearish, you gotta stick with your analysis, because that's exactly what I had to do. Anyway, so that's kind of what we're looking at here. This was what, since 1970 to 1985 or so, we finally gotten out of this kind of accumulation phase or so, kind of a, just that massive channeling action, or, something like that. And then finally we got up, we retested here. And then after that, you can see that we had that kind of move. I know in 1987, we saw that huge decline. But, you just had to wait a couple months for that to start getting back up. And then if you just waited another year or so, not even a year, if you just waited another, actually, it took more than a year. 87. You have to actually wait a couple of years to get back. But if people had patience here and just was able to hold through some of those, then for 2 years in their investments, they were able to get their money back. If they would have held a little bit more, obviously they made a lot of money there. But what I'm saying is we got into this massive uptrend there, and my theory on the market is we're getting into, because we just retested that level, that another move like that. So that's just interesting. Obviously, we're not gonna just be fixated on that and then just blindly, go along the market, but we gotta analyze the market on a weekly, maybe monthly basis, and make sure that continues on. This is a broadening top. Broadening top. You could also call it a what do they call that? Microphone, megaphone. I always forget that megaphone pattern, right? So megaphone pattern. The bearish is if this thing would have rolled over here. So what happened again? This is monthly chart. Is we broken above it, right there. You see it? We've broken above it. That's why I came with that conclusion. If this becomes a bear trap, or bull trap rather, and if we fall back inside, then yes, then that could be a huge bearish signal at that point. However, for the fact that we bounced, look at this, we actually bounced rather perfectly. Look at that. So you got the resistance, and we had a little bit of shakedown here. I remember right here, and I said this many times. I forgot his name. somebody came on TV or something, and then he like warned the whole world, or warned the whole like investors and traders. They're like, take your money out of stock market, start putting it somewhere safe, because the Dow Jones is going to what? He said like 6,000. Yeah, that's what he's saying. The Dow Jones is going to 6,000. This was back in 2013. I remember specifically watching that, and he was saying that. And he was so confident that, that the market, because of Dow Jones, this megaphone pattern, that we're going into 6,000. And then he just warned everybody that, they should take money out of stock market. Well, a few years later, that didn't happen. We continued higher. We came back to that level. We retested it. We're bouncing back up. So and look at that candle. That's a strong candle. We're back above 1020 EMA on the monthly chart. And this month, we're hovering above. We're holding rather well above it after finding support perfectly right on that 50 EMA on the monthly chart. This is also Morningstar reversal. So we saw a pullback, bearish candle, a little spinning top, and then we got bullish candle, and then holding through. And there's higher probability. Obviously, nobody truly knows, but higher probability is going to continue. If it makes new highs, then it's going to look a lot like it's going to start to look a lot like that, right here. And once we clear that high, right there, that was it. That's what we call public participation. Public participation. Now all these greedy people, they're going to start coming in. This is what we call accumulation, right? Stage 1, stage 2, and then we get into a secular, a bull market. 20 years. 20 years. After 15 years of accumulation phase, consolidation, or channeling action. Something similar, that's what I'm saying. Anyway, let's go back. Let's not talk too much about that. So, daily chart looks great. Let's go to NASDAQ here. Qs also, I threw this Fibonacci here very, very close to that 38.2% Fibonacci retracement. Now we're cultivating some kind of an uptrend support there. Q's been very, very strong. The technology sector has been very, very strong. Very, very well defined. Higher lows, higher highs. You can see the higher lows, very, very well defined. I mean, if you look at the Qs, you should be very, very confident about this market. Very, very confident. You just look at this right here. That's a strong, a solid, and healthy intermediate term uptrend formation. Like you're looking at like athlete or something. Like this is a strong guy. Like if these indices are my kids, like Qs is the strongest. Russell's weak, Transport's weaker, but Qs is like he's a leader. All right. We're back above 1020 EMA, looking very, very good here. Under the hood, you have no participation. What does that mean? No participation. Only Amazon, Facebook, Google, Netflix, Apple. Well, under the hood, people use that term a lot. I never really knew, I really never know what that means. What under the hood means is anybody can if anybody can really understand what happens under the hood. Here's my theory, guys. You guys know price action is everything. Price action is always a thing. There's always speculations and opinions, and there's always different feelings about it. But the price action, the tangible data, is telling us there's an uptrend, and we must respect it. You know what I'm saying? We must respect it. Especially after this decline, bears had their chance over here. This is where they had their chance to bring it down. What they needed to do is cultivate a downtrend. Okay, lower lows and lower highs. You go back and study any type of market crash. The market crash does not happen before there's a cultivation of lower lows and lower highs. So that didn't happen. And then what happened was we started to cultivate higher lows and higher highs. And for this to go back into a downtrend, it's going to take a lot. I mean, it's going to start to do something like this, and it could take months. And obviously, we're not going to do analysis with the data that is not there, right? So then that's just the other question. So with the current sentiment of the market is definitely bullish, and my opinion, we're very, very strong. Market is very, very strong. Let's go to Dow Jones. Very, very similar chart here. This is Fibonacci retracement zone right at the 38.2%. Not mentioning that 50 MA, right? The 50 MA, strong resistance in the past, because you can see that 50 MA coming down, hit that, we pulled up, pulled back, went up, came back down to 50%. 50 EMA, I mean 50 EMA is flipping its team. Used to be a bear, now a bull, and then strong bounce. We're back above 10 EMA, all the moving averages, and that's also very bullish sentiment there. Yeah, I don't. I don't agree with the theory. What's your name? Deb. Yeah, I don't think I'm gonna agree with that. At least in my philosophy, my theory of the market, that's not what I agree with. But I appreciate your comment. So looking at the Dow Jones, obviously with the high lows, obviously lows and highs. Now we have a cultivation started. That's what cultivation meaning. Let's go back to look at 2011's crash or correction, right? With a very, very fast correction. We had the head and shoulder pattern, right? You can see that head and shoulder pattern, left shoulder, head, right shoulder. Again, this is 2011 July. And then we had a neckline here. Neckline was broken, came down hard, started zigzagging. And guess what happened? What happened? We started cultivating what? What does that mean? That's high, that is a higher high. That's low, that's a higher low. And then what happened? Market continued on. And we saw a slight correction again, but now let's look at primary term. Is this low higher than this low? Yes. So now we may have an intermediate term uptrend broken, but we have now what is carrying this market now after this correction or move? A primary term trend. We had an intermediate term trend broken, but we have now primary term carrying this. And then since 2011, what happened? Continued on, continued on, continued on, continued on. And then what happened? We have an intermediate term trend broken. But what supported this move? A primary term trend carried on. What is primary term? Well, that's a primary term. You see that? So if you study these pullbacks and the nature of the way it's moved, then you would understand that we're getting back up that could potentially have another move like this. 2011 all the way to 2015. That's a whopping 4 years of a primary term uptrend run. We had pullbacks. We had this, you had short-term corrections because that's how the market moves, up and down, up and down. I'll tell you that this is your opportunity to buy. And I told you this a month ago that this is your opportunity. And I told you that when things were actually looking pretty bad. This is not a time to fear, but it's a time for an opportunity. I'll tell you to buy here, and I'll tell you to buy here. I wouldn't tell you to buy it up here. So I mean, if you with the right strategy, even though you buy it up there, if you have enough leniency, you can still make it work. But this is what I like to ride, and this is your chance to have another ride like that. That's not a failed breakout. I don't look at that as a failed breakout. I look at that as cultivation of higher high. So you're saying that because we made a new highs and we pull back, that's not failed breakout. That is cultivation of higher high. We cultivated higher high because we have cultivated a higher high. When it pulls back from that, there's higher probability that it's going to create higher low. That's how the market moves, right? I mean, you can see, I mean, there are times where it gets high and then pulls back, but it creates higher low. And sometimes it doesn't. Sometimes we get this steep decline, but what are, you know, if you just go back and look at your probabilities, what is likely to, especially after this kind of decline, and then it makes that higher high, very rare chance that it's going to go back down lower than this low. Very, very rare at this point, after cultivating that higher high. Very rare. Though anything can happen in a market, right? Okay, so let's look at semiconductor. Semiconductor also is very, very important level. Obviously, we have cultivated an uptrend there. Not mentioning that we are right on the 38.2% retracement zone. We bounced off of that. We got what? Higher highs, higher lows. But what's really important about semiconductor, I read an article about this. I actually did a whole video on it. Semiconductor to, semiconductor to 1300. No, not 1300. Did I say 100? Oh, was I looking at actual semiconductor? Yes, I was actually looking at actual semiconductor. Semiconductor is like 1200, right? Very, very important. This is very, very important. A bubble, crash, fear, a healing takes, 14, 13 years. After this kind of crash, everybody's so in shock. So that's how long it takes to heal, is to heal from its shock, right? And so it took 13 years, it took a decade. And then what happened is it finally broke out from major vicinity. This is major pivotal level. This is a major resistance level. There's a strong resistance there. It was support, and then it was resistance, and resistance. Finally, we broke out. But look at this move. Just went straight up. Straight up move is actually very questionable at best. The straight up move is actually not sustainable. We need that higher low. We need to understand the trend is cultivated with the higher lows and higher highs. We pull back precisely back down to this level, and also right on that monthly 50 MA, right at that level, and we're bouncing back up here. And also we have Morningstar reversal, bearish candle, spinning top, and then bullish candle, Morningstar reversal. We are holding above 10 EMA, 20 EMA on that monthly chart. Why is that very, very important? Because as far as the chart is concerned, pretty similar to NASDAQ there. Resistance, broke out, pull back, retest. So when we see a breakout, right, and when it starts pull back, so many people want to call that a bull trap. But what it likes to do is when it pulls back, it likes to pull back to cultivate that another higher low and retest the resistance level. And there are times where you'll see, traps. You'll see traps, but you don't know it's a trap until it falls back inside of the channel, inside of resistance. This time what it did is we retest that level, and look at this run. We came all the way back down to 5,000 level after that instant, right? So will you call me crazy if I say semiconductor is going to 1200? Is it a possibility? Right? Is it a possibility? La 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 la. Yeah. Oh, right. Time to enter QQQ. Let me see. Yeah. So Anthony, I mean, if you you got my email, Antonio. We're back above 10 EMA, so as long as we stay above 1230s, 1227 on Qs, should be pretty good for tomorrow. Because we have intermittent high-low cultivation there. Okay, why you trace two horizontal lines? What does that mean? Why you trace two horizontal lines? Why you trace two horizontal lines? I don't know what that means, man. Why you trace two horizontal lines? Rephrase that for me. Let's go to financial sector. Financial is very similar as well. We bounced right on the 38.2%. We had that double bottom action there. Again, we went up, and when we pull back, it likes to retest that level, and when it pulls back like this, we embrace that pullback because we're gonna cultivate higher low. And again, I mean, anything can happen. This thing would just come straight down and then break below this level and the market crash, Yeah. But as far as a probability is concerned, that kind of stuff is very rare. What you want to see is, okay, we got double bottom reversal here. So if this thing goes up and pulls back, then there's a good chance that we're going to retest this level and then gap. These are very basic technical analysis. And I'm not saying that like, well, you don't know the basic. What I'm saying is, it's basic, yet it's hard for many people is because their emotion. Because they let their emotion get in the way. But if you just look at this and just respect that basic technical analysis, and sometimes it's not guaranteed. Nothing is absolute in the market, obviously. Nobody can guarantee anything in the market. It's all probability game, right? But you will start to see that these kind of mark will continue to happen. These supports getting respected, but price action is very, very important. Again, I'm very bullish in the market. Russell 2000 is the weaker link out of them all. We're still below 200 SMA, still below 100 SMA. And some might say, because Russell 2000 is not near all-time high or is swing high, they might say that because of that the market is going to roll over. That theory doesn't work here, because just because the Russell 2000 is weak doesn't mean that S&P 500, Nasdaq, and everything else is going to start coming down. Because it could take its time and then get back up. We can't just rule everything out. So that's the problem most people kind of run into when they're using technical analysis to trade, is that they'll have one piece of evidence, right? And then they will put so much weight on that piece of evidence. So one thing that is important that we have to understand which one gets more priority than anything else. Because we just looked at S&P 500, we just took a look at Nasdaq, we just looked at Dow Jones, just looked at semiconductor, we just looked at financial sector, we just looked at all of those, and they're very, very bullish signal, right? But then we looked at Russell, and we're like, Russell, we still have the death cross, we're still below 200 SMA. Oh my God, that's the tell that the market is going to roll over. That's just kind of a not logical to think that way, because we have other indices are showing strength and we have one index that's showing weakness. And so then we have to understand that just because one index is weak doesn't mean that all other ones are going to be weak as well, right? Because there's a lot of scenarios where Russell was very, very weak in 2013 and all the way to 2014 with a major topping pattern. You want to talk about market crash? That's a monster right here. That's a monster guy right here. And I've been talking about this since 2013. That was not able to get this market down. Why? While the Russell 2000 was forming this monstrous reversal pattern, the other indices were not. The Dow Jones, the S&P 500, Nasdaq were not forming that monstrous reversal pattern like you see in the Russell. And what happens? We even had confirmation, the initial confirmation, and then Russell 2000 continued on higher because of the other indices were strong, right? So my conclusion with this, and obviously we're on a primary term uptrend. Obviously we're on a primary term uptrend. See? So obviously we are in a primary term uptrend. So my conclusion is this: other indices will carry Russell back up to the upside, and that's my analysis there. Yeah, New York Stock Exchange is definitely weak as well. New York Stock Exchange also weak. So another weaker stock there, but we are still trying to find some kind of primary term uptrend here. Hasn't fully confirmed yet though. We're just bouncing off of it. So if you want to see New York Stock Exchange doing better, we definitely want to gap back above 10,000 level right here, above that 200 in this vicinity. This is a vicinity I would call, complete reversal zone on the New York Stock Exchange. So we do have a cultivation in the intermediate term though. What we got going on is obviously we have this level. This was a double bottom reversal. This was a neckline. Respected. We're getting back up here. So if we get above this level and close above about 10,080, 10,800 level vicinity, we see something like this happening, and we continue to cultivate higher lows and higher highs, I can see that New York Stock Exchange would also gap back up to its prime time uptrend there. Forms massive head and shoulder. Two 2007. Oh, you mean before the crash? Well, it's a little bit different pattern. A lot of times when there's a head and shoulder pattern, you see how it's more symmetrical. Left shoulder, head, right shoulder. This is just, it could be, but I don't buy it. If it would have been something like this, as far as the technical is concerned, something like that, that would be more like it. We're just starting to, just a lot of grinding work. But again, what I'm saying is one index's topping pattern is not enough to crash the whole market. I just gave you example of that where we had massive topping pattern on the Russell 2000, 2013, and 2014. This looked very much like 2007, right here. Look at this thing, a monster, right? 2007 on the Russell 2000. Monster head and shoulder pattern, and we crash. But you know why this was very important? Because we had this pattern forming on every single indices, not just on the Russell. So going back to 2013, 2014 here on the Russell, a massive, this is market crusher right here. When this was forming, other indices were not forming anything. So right now you're talking about New York Stock Exchange potentially forming that, massive head and shoulder formation. Well, we're not seeing that formation on any other indices. So I'm not going to put too much weight on that, right? Any other questions? I don't think Russell's topping, to be honest with you. I think if anything, I see a cultivation and an uptrend. If it was topping, we are topping out here intermediate term. We're topping out here primary term, but that never played out. And primary term uptrend is still intact. I don't believe it. I don't think so. We may see, you might be thinking like we're seeing some kind of a, just something like that, or something. But without the data, I'm not going to buy that because we had something similar in the past, like here. You know, like that was something like that right here. That didn't play out. And that, you see how long that's going to take? The longer it takes to form a topping pattern, the more it's not going to play out, at least in my research. Any other questions on the indices before we go to individual equities? We are in a bull market. That's what that is. What do you think that is? That's a bull market. That's a primary term uptrend. Trend is in effect until it is, give us a clear signal that it has been reversed. We do not have a reversal signal. Nothing has been confirmed. I already showed you on the Russell. Right there. Here. Primary term trend is still in effect until it gives us a clear signal that it has been reversed. It has not been reversed. And we have other indices so strong. Dow Jones strong, Spider strong, Q strong. If anything, we have a similar sentiment as here. That's what we got going on here. Very, very similar sentiment. Actually, in fact, MACD is condoning that. 2011, actually 2011 right here. Bullish divergence. Bullish divergence. We haven't seen bullish divergence. If you just look at this, we haven't seen bullish divergence. This guy right here, we haven't seen this for 4 years and finally start to come back out. So the MACD is giving us the signal that is very, very similar sentiment to 2011. We may not see, new highs anytime soon, because we might see something like this right here. We go back to maybe somewhere 127 or so, and then we pull back. But as long as we cultivate high lows, we're gonna get back into an uptrend right here. How strong? What do you mean how strong? How strong? Antonio, I don't know what do you mean by how strong? Okay, let's stop the indices. Let's look at some of the individual equities here. At a request for Nordic American Tankers. I do not trade this, so I don't watch this, and I'm just watching it now. I'm just seeing it now, but I actually, interesting on the weekly and monthly. I actually like a monthly chart a lot. Some kind of accumulation there. Some sort of double bottom. Potentially inverted head and shoulder. Potentially some kind of bottoming signal there on the monthly chart. Weekly chart. It's great sign in the weekly chart. We have 200 and 100 SMA crossing back up. Right there. And this is a weekly chart. So we're talking long-term wind switching back up. Daily. So the question was, I think, the long setup, right? Okay, so this one is gonna be a little bit tricky if you know for long setup. Reason is because we have a gap. This gap is still not filled. I mean, it attempted to fill right here, but that wasn't completely filled, which means the gap is still open. All right? Yeah, gap is still open. Gap is still slightly open, I believe. Correct. 10. Yes, 100, 200 SMA for long term, 10, 20, 50 for short term. Yes. 50, yeah, 50 is a bit of more of an intermediate term. 10 and 20 is for minor term. 100 and 200 SMA is for intermediate to primary term, longer term. So looking at Nordic American tankers here, we have this gap still not filled. I don't think. Excuse me. Yeah, we're not filled. I mean, it just got really close filling it. No, it didn't get filled. See that right there? Where gap is technically still open because it wasn't filled. It wasn't completely filled. So every time when you're dealing with gap, it gets pretty hectic. So if you want to see your entry level, right there, 1595. But what you want to do there is that it can't just have intraday poke. What you need to see if you want to go long on that is that you want to see this thing staying up like this, staying above that 1595 pivot, okay? And next day or few days, it must hold. If you can see that happening, you could probably enter somewhere here. Good thing about this is we have some kind of cultivation going with higher lows, but the downside might be that we still have certain resistance there. So if you want to be more safe on this, then you actually want to see this thing clearing above it. So you want to be like very, very safe, then 1595 might not be because of that, because of this downtrend. So 1660 safe for entry, 1595 it's bid, yeah, you know what, get rid of that. Get rid of that. I wouldn't want to enter long on that until 1660. Targets are 19 or 20 or so. Maybe swing position trading there. I see something like this. It's actually a good looking chart. It's actually a pretty good setup too. We're in a primary term uptrend too. Like there. So we got that. So we got very faithfully cultivating higher lows and higher highs. But I want to make sure, if you want to enter on this, I want to make sure we clear above this resistance and clear above horizontal. Again, just because it pokes above 1659 doesn't mean that it's ready to go. You want to make sure you see it's closing above it for a day, and then you want to make sure it hold above it for a day or two before an entry, and then you want to ride it up. Any questions on that? You're very welcome. I'm gonna actually watch Sure, I'm gonna actually watch this stock, NAT. United Health Group, monthly, we're still in an uptrend. Very extended, but weekly as well. We just, this setup has a great dividend too, okay. This setup is very, very like eBay setup. This is very, very same as eBay setup. We were looking at eBay for quite some time. Here, I'll show you. And so it's very, very similar to eBay setup, meaning we got into a lot of this this long, like this consolidation accumulation phase. And when the longer the accumulation, especially when it happens after an uptrend, not a downtrend accumulation, but that also is tricky too. But when it's uptrend and it's accumulation, there's head fakes everywhere. I mean, it's crazy. Head fakes here. I mean, this is, we're talking about, where's that guy go? The guy we talked about, there's a head fake, there's a fake. This is what we're talking about. You will see a lot of head fakes when you're seeing this kind of a move. Like a lot of sideways movement. It made money. It took money from both sides. The market took money from both sides. People are getting like, oh my God, eBay's breaking out. Yes, I'm going to start getting on. So they got long. They got burned. I'm like, haha, the eBay is not going on. eBay is going to tank. eBay is going to go to 14. eBay business model's dying, stuff like that. And then they got burned. And then it got up, came down. We get another trap right here, bear trap. So you got trapped both ways. So you got to watch out for that. So UNH, United Healthcare, has a very similar pattern. So you got to really watch out for these traps and whatnot. And we didn't go long on eBay until right here. Right here. This is where we went long eBay. We're still holding it. We added more on the earnings call. The reason is because we didn't see cultivation and uptrend until here. Okay? Watch this. So do we see, we did see something happening right here. We did see higher lows and higher highs. But what we didn't see was on eBay, we didn't see the old resistance getting respected as a new support. If this sort of came down and then respected it, then I would have probably went long somewhere about here because I was watching it. And I'm like, no, and this thing started falling back over inside the channel. Then I knew the problem. The difference was here. Here what happened was we got the higher lows and higher highs. And instead of this thing falling back over to the lows or back into the channel, it has decided that it was going to cultivate higher low. Another higher low. That's something that we didn't see here. We wanted to see higher low here. We didn't see it. That's why we pulled back. This time we did see a higher low, and then we continued on. And we pulled back, yes, pretty sharply. But at that point, the uptrend is still cultivated. We're now cultivating an uptrend. We have finally broken out of this accumulation and sideways channeling action, right? So looking at UNH, very similar. So this setup is very, very difficult. Most people think that it's easy. Let's see. When you say long, you mean stock or like Delta 70 leaves or Delta 26. I say long, you mean stock or like Delta 70 leaves or Delta leaves. Yeah, so when I say long, you can buy shares, so you can do leaves with the Delta 70 or higher. So Delta 70 or higher. So they will be in the money leaves. So United Healthcare, what you want to do is like, you just watch out, and what you want to do is you want to see this thing going up and finally breaking out. But what you want to see is just because we're breaking out, don't go long here. What you want to see is you want to see this thing pulling back, and you want to see one more cultivation of higher low. Like that. But you gotta be very, very careful as to what you see here. What candlesticks, what constitutes a higher low. There's different ways of looking at it because every stock's gonna have a different sentiment of putting candles there. So I can't just explain it because I wouldn't know until I see it. So once they start to see that higher low, then you may go long after a confirmation of a bounce. But But yeah, these kind of setups are very hectic. It could take years before you can finally see something going on. It could go up and then come down and then it's just very, very difficult. Yeah, you're right, Antonio. You're very, very correct. So what Antonio was saying is there might be it just goes straight up, yes. And if it does that, gotta let it go. We're not gonna chase it. It's just, it happens once in a while. It just breaks out and it just goes. Like, it won't pull back. Then what I would do is I would just wait till see a kind of a big steep pullback or something like that before going long. You gotta let it go then. Yeah. Then you just, yeah, sometimes it does that. That's what makes people crazy. That's what makes traders just go crazy. Like, why? Why does this happen all the time? You know, like, why can't it be, you know, that I can see it and I do something? So they go long because they are thinking that we're going to have a pullback or we're going to have just straight move, and then it just goes down. But the more, I think I see more pullbacks more likely to happen than, you know, just going straight up. Sometimes it does have a straight up move. Yes, you prefer pullback. And this is just, yeah, it's just difficult setup. I wonder if I can see here. This is a pretty good example UNH. Right? I mean, it's a little bit ugly, but we just kind of started hanging out here. We finally broke out. Okay, we finally broke out right here. So it retested this resistance and new support, right? My setup will be like, I'll be going long right about here. And you say, well, okay, this thing pulled back. Well, see, my stop won't be right below it. I will give enough leniency, because the reason is because once this thing breaks out and there might be one last shakeout. That's the thing is, if you miss this entry, sometimes if you wait, you get a next entry, because then you could go long somewhere about here. But let's say I didn't wait. I went long. This is again back in 2014 in March. Let's say I went long right about here, right on the 10 EMA, like right there. That's when I'm long, right? Dang it. So I went long right about here. My stop, to be honest with you, my stop will be right here, because I want to give enough leniency. But my setup is long term. I'm not going after just a few days move. My goal would be riding this. Wow, that would have been an awesome setup. Can you imagine? I mean, look at that. But what it does is, before we see a huge move, it shakes people out. It shakes people out. Look at this. Because you thought this was a breakout. Sometimes it goes straight up, but sometimes it doesn't. You thought that was a breakout, and then this thing pulling back, you're like, well, I was wrong, so you get out, and then, you see. So you want to do a long-term trade, you got to give enough leniency. The reason why my stop won't be down here, because it's, as far as the primary term is concerned, this could have come all the way down. It just must stay above this low. As long as this low is higher than this low, can still be considered as high low, because obviously this low is lower than that low, and this low is higher than that low, right? So even if this one came down much lower and then bounced here, still considered as high low, pull back, higher low, gone up, came down, higher low, boom. And you had a little bit of patience, and if you just was able to hold through it and held for about 6 months a year and trade that leaves with some 70 delta higher, and then get up, you close some out, maybe add some more, and then get out some here, add some more, you know, and then you start chopping here, just get it out, close it out or something. That would have been a great trade. That would have been a great position trading, and that setup is perfect right here. And I make it sound so easy because we just went through this, but when every day you're seeing this thing coming down, that's how this market stir you up emotionally. Because you know what I'm saying? It's going to come down like this. It's got day after day after day after day after day after day after it's coming down. I mean, this took what? A month. 1 month. Right? 1 month it came down. So you're like, what the hell, man? And you're happy when you're making money, but now you're irritated, and you're thinking maybe there was a massive bull trap before doing this. because we even break below the prior pivot. This is why we're not so obsessive with these pivots so like intensely, like so precisely. It's the vicinity. And you know what? As far as minor term is concerned, this would have been potentially even lower low, a minor term. And people might even go short here. But primary term speaking, we're still into the primary term uptrend, right? That would have been an awesome setup. And that's exactly what I'm trying to do. And then, man, you would have, yeah, United Healthcare just thrived. And then now we're consolidating. Obviously, after that kind of move, yeah, that's normal. Any other questions? If not, we'll go to Apple. Okay, let's see. Most of you guys are still here. Very good. So I know what level everybody was watching at this level, right? And as soon as we broke that level, everybody started exiting because their stop was just below this level, like just below that 50 MA. That's what their stop was, and everybody got just stopped out. And then they saw today's action. They're kicking themselves. They're like irritated. They're pissed off. They're like, what the hell? You know? That's why the cultivation of trend is very, very important to learn. It's very elementary. Like, what? You're just going to count these lows and highs? Yeah. We're just going to count those lows and highs. Is this low higher than this low? Yeah. Then that constitutes as a higher low. Is this low higher than this low? Yes. Is this high higher than this high? Yes. People want to call that, well, okay, okay, last time I did live midweek update, maybe 2 weeks ago, I talked about, well, it was last Wednesday, I talked about this. People want to call it a bull trap, but I said it happened and it matters. We printed something. We did something. It's not something that, oh, let's just act like that never happened. It actually happened. It's very, very important that this happened. Why? Because we cultivated higher high. And why is higher high important? Well, when it cultivates higher high, when it pulls back from it, it has a higher chance. Though anything can happen, it has a higher probability that it's going to cultivate higher low. That's why it's important that it created higher high. But what if we didn't create that higher high and then it just kind of pulled back here? Then it would have been dangerous. Then we would have gotten below this level. We would have gotten lower lows. Things would have gotten really bad for Apple. But for the fact that we gotten back above 120, which is very, very important, that we printed this, and so many people want to call it like a bull trap, fail breakout. It just, they're only looking at things very in a minor term perspective. Like small, like they're just looking at this like this. You know, like that. I always use this analogy that when I first learned how to drive, you know, my uncle told me that, you know, I'm swerving because I'm looking at too closely, like in the, you know, like steering wheel in a road right in front of me, like, because I'm scared. He's like, look far ahead, and then your car will go straight. You know, so for in this situation, go a little bit further and see where the intermediate term trend is. You know, where the intermediate term trend is happening. We talked about on my market commentary that this was bullish piercing. We need a follow through for 2 days, and so that's something that I will never say is, you know, mark my word, because we have bullish piercing, it's gonna go back up, because nobody knows. Because if this would have came down today like this, that would have been bear flag. That turned into a bear flag. So the bullish piercing turned into bear flag if we saw that. But because we saw this, now the bullish piercing is confirmed. Okay, bullish piercing. Right there, we had a 1 day of pause, we gapped up, we have follow through, pretty good volume, and this is all happening in the vicinity of higher lows and higher low and higher high. But things are gonna get a little bit hectic here once soon as we start to get into the or the gap area, because Apple just do not know how to deal with gap area. It just gets very freaky every time it work with gap area right here. This was a huge gap, earnings gap. We got to fill this gap, and then we stay here for another several months. Same thing happened here. There was a gap here. We filled that gap, stayed here about a couple weeks, not too long. So I think this gap looks more like today's gap. This is a very, very big earnings gap. So I think we might, but it got up. It got up, even though it was hectic. It got up. So we might go up and fill it, and then we might do something like this before getting up. So Apple's still, looking at this chart, there's still some fear lingering around. We're still below 200 SMA moving average, and people are still like thinking about this here, and they're just very, very fearful. So remember what I just told you. Look ahead, look far out when you're a little bit fearful, right? When you're swerving, look ahead. Yeah, well, let's use MACD. We can actually throw in RSI too, I believe. Oh yeah. I can't try to sound like a cooking show. That's beautiful, isn't it? That is just gorgeous. Yes. Yes, that is just perfect. Cooking show. So when you go far out, and just look at things, you see different perspective, right? I mean, things still can be hectic. There's still always, nothing is absolute in the market. Nothing's guaranteed in the market, obviously. Anything can happen. The market could just still roll over and whatnot, and something could happen. But once we watch this, once we see this chart right here in the weekly chart, I can't help to notice that we're seeing potentially a bottoming signal. RSI has expanded a lot already. MACD he's having a little bit of trouble here. MACD is just a little bit unsure, but you can see that they're pointing back up again. These histogram's gotten up to positive side. Very similar to here, 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 here. So historically, since 2009, you had three times that you could have gone long for some opportunity. We're talking like, let's ride this for years. We had three chances: 2009, 2013, and 2015 now. Maybe it's a false signal. I mean, obviously these signals can be nullified. These signals can be obsolete. And once these signals get nullified, then I'll know about it. But for now, it's valid. For now, it's valid. So when we look at things a little bit far out, if you just go out and look at this, this is where you can say, okay, the wind is still blowing to the upside. The probability, if you look at things long term, probability is that the buyers have higher probability, that buyers have more favor here than bears. RSI, we haven't gotten this extreme oversold. We only got to this extreme oversold stairs 3 times since 2009. 3 times. We haven't gone below this level. This was back in 2008 crash, 2012 crash. It's interesting that we really didn't have a crash this time, but RSI gone below the same level as it did when it crashed. So that's a great sentiment. That's how much people are fearful of Apple when they start selling. They're remembering, like, because I had a lot of questions. People were asking me, you know, like, Kay, doesn't it look like 2012? Kay, what about the, you know, I'm like, no, I think the sentiment is different. And I still think the sentiment is different. I'm very bullish on Apple. This is opportunity on Apple. You want to buy Apple cheap, this is opportunity. Obviously, I wouldn't want to go long until it clears above the. If you're not in it, I don't want to go long until it clears above the gap. You know, I think 150. Some of these levels are doable. Any other questions? You want me to look at some other ones, like Tesla or something? What time is it? 4 o'clock. 420. Oh, what the hell? Let's look at Tesla. We haven't been involved in Tesla a long time, but I don't really like Tesla. Remember I told you guys I just don't like this. This just looks like we're gonna get stuck here for a while. And Amazon. We'll look at Amazon. It just, and then we got this like intermediate term downtrend going on a little bit, and then so you wanna swing trade this. You wanna do a little setup here, like you could possibly, again, I don't swing trade anymore, so I mean I wouldn't do it. I personally not gonna do that, but you know, this would be your entry. I used to though. I used to swing trade a lot. Swing trade, entry, top. So what you want to do is you want to make sure we close above 232.88, right? Like that, and then you make sure it holds above it for a few days. Watch out for that 100 SMA, that it doesn't act as resistance, and if you're sure that you can do that, it's probably the target is about let's be like conservative, like 260. Let's trade right over here. You're trying to trade something like that. That doesn't excite me anymore, so I don't do that. But so I haven't, and then we got this. Oh, we got this resistance coming now. So now, yeah, not that attractive now. Actually, 260, no. Right here, 252. At this point, you would have to like tight stop there, and then we have resistance coming down. So it's not very short term. But I don't think Tesla's not going to go anywhere. This thing is just stuck here, just very ugly looking chart. You know what I want to look at today? Gold. We'll look at Amazon, because you guys remember I used to talk about this back in the day. I'm not trying to talk about it because I think something's happening. QCOM, okay. I just thought I'll talk about it. See, you know, the thing about gold is, it's like we're still in a downtrend. It's crazy. It fools so many people, including me, in 2013. I saw so many like analysis on it and people talking about it. This may be something, maybe falling wedge or some sort. You know, like get tighter and tighter, tighter, and then something. But I wouldn't wanna just guess that right now until I see actual like evidence, like tangible data, seeing that. And even if this thing breaks out, I wouldn't go long. What you wanna see? Let's see if it breaks out of this, falling wedge. You wanna see a very solid higher low, and so then we start to cultivate higher low and higher high. And this might be a good level, something like right there. So I wouldn't like trying to call bottom. What I would want to do is I want to see a reversal pattern and confirming that reversal pattern. But man, gold and silver hasn't done anything. It's crazy. Silver, very, very similar story. Silver just looks very, very bad. Lower lows, lower highs, just not doing good. Look at this one. This is a weekly chart. I believe that's a weekly 50 50 SMA. Yeah, weekly 50 SMA right here. Just, man, that thing just acting as resistance perfectly here, here. I use SMA for weekly chart and monthly chart, just to let you guys know. For daily chart, I use EMA. Okay, for daily charts, I use EMA for 50, 10, 20, 50. For weekly charts, I use 50 SMA because it's more longer terms of simple moving average. EMA is exponential moving average. What it does is it gives more weight onto the like a recent price action. Simple moving average is SMA is just flat out, you know, average. So when I'm looking at weekly chart, I really don't, you know, just I'm looking at a more big picture. So that was my logic in that. GDX, same thing. Same thing there. GDX, this is 20, monthly 20 SMA. Boom, boom, and just was not able to, that's just too much. Just too much. Let's go. No, it's a 20 SMA on the monthly chart. 20 SMA on the monthly chart. So if you set up your chart on the monthly and then you just put in moving average 20 SMA. Yeah, 20 SMA. Google is awesome. Google's been doing great. It's been good for us. And you guys remember my article on it. It's, you know, that's kind of what it likes here. I don't want to like, that's what it likes to do. The Google likes to, it loves to Alphabet Inc. now, it loves to move in a pattern, like this big patterns. What's going on? Hold on a second there. So you use all the moving averages on a chart, but only SMAs on weekly and monthly. Correct. And I don't even look at 10 and 20s on the weekly and monthlies. What happened to my freaking? My thing got frozen. Anyway, so again, these are the things, this is why we're going to look at long term, you know. Google there, Google here. You really had 3 chances to just really have a great setup, like the long-term proper setup. I mean, you could have still gone long here. These are good chances too. Some of these pullbacks are always great setups right here. But I'm talking about like these like major setups on Google. Since like 2005, you only had a 3 major setup. We're talking like a major setup. It was long right here, long right here, and long right here. There's the 3 major setups. Right? Let's look at, obviously this is not a level you want to start getting in. You want to just continue to ride it. 20 MA continue to act as support. Very strong stock. 800 is our target. That's from like 5 something, 550. Let's go to QCOM, Qualcomm. Ooh, it's downtrend. It's definitely a downtrend. So very ugly chart. I would stay away. I don't like shorting when market is bullish, but it's definitely looking not looking good here. I'm just looking at weekly chart, monthly chart. Everything looks bad. Everything looks bearish. However, hold on a sec. Yeah, we retest this level. That was an important level they needed to hold. Resistance, resistance, support, support. We just retested level. We got rejected. We put in a lower low. Next supports maybe here. We might go back up, coming down. I mean, yeah, that does not look good. Yep, I only position trade long term, yes. I don't do anything short term. All my trade setups are, 6 months a year. And some of my long-term strategies are 1 to 2, 3 years. But position trading with using leaps, 6 months a year. Amazon. Whoa, Amazon is just crazy, right? Yeah, threw a little hammer right on the 20 MA. Very similar to this guy right here. That's a hammer there. That's hammer here. And then like boom. So I mean, you want to swing trade this to upside and let 20 MA be your stop or something like that. As long as it stays up, you might trade like that. I don't like trading like that anymore. Man, this is perfect right there, man. I wanted to go long, I didn't. Why didn't I do that? Oh, I don't know, something. That would have been a perfect level to go long. We're looking at it. I don't know why I didn't go long. So looking at Amazon, just like I was talking to you guys about Apple, right? You just really had a couple times to have really good setups, Would have been like somewhere here for long term, here and here, 3 times, 1, 2, 3, and you hold about a couple of years or so, or you ride it every year. You buy leaves and wait and buy another one, and then you just ride it for a few years. That's it. I mean, I know I'm making it sound so easy. It is easy when you look at it like this, big picture, but when it's grinding like on a daily basis, you're like, oh my gosh, and it's pulling back, it's not moving. That's why most people cannot trade long term. That's why most people day trade, and day traders lose all the time, and it's not very fun. But yeah. I'm watching Netflix. I'll end video with this. We'll call it a night with Netflix. I was watching it today, and I actually kind of like this setup. I'll show you guys this setup that I have on Netflix. So basically, what Netflix did is we basically pulled back, and then we started like really bottoming out here, and then we kind of form some sort of consolidation, symmetrical triangle. We finally broke out, and we broke out this level and this level right here, and I can forecast maybe 147, 160 if everything goes well. But we have some gap areas here. We're gonna call it a night with this after Netflix analysis and give you guys a setup. I didn't go long today. I kind of thought about it. I didn't. We also have a very, very strong bullish uptrend cultivation in primary term. Like that. So we got this level, this level, this level, this level. They're all getting super respected, right? And we have just primary term uptrend going on. So I mean, obviously, when this thing are like going, you don't, if you missed it entry, you probably don't want to go long. But once they start to move sideways moving, that's kind of a. I've been telling you guys that I didn't want to be involved in Netflix because of this move. And this thing is this one of those cases where this thing broke out and it never pulled back? That's one of those cases. I was waiting for a pullback, it never did. I let it go. I never traded. So that's just sometimes your call. Sometimes you go for it. If you feel good, you just go for it. Like on earnings, you go long, you hold it. But I really wanted to see a pullback, because then I wanted to go long on pullback, and it never did and kept going higher. Oh my God, I just missed it. And I was going to chase. There's something I will never do is chase a trade. I never ever chase a trade. It took a while for me to master that, not to chase a trade. So finally, it feels like it gave me another chance. But we have a little bit of gap that we're working on. But it's that these are tiny gaps. So I'm wondering if there's going to be a little hecticness coming in and then maybe a potentially pull back and then create another higher low. I love to go long when it pulls back. But what if it doesn't pull back and keep going higher? Well, then I missed it again. I have many other setups that we're currently long on, so I mean, it's not like I have to. It's just like this is a great setup. I've been wanting to go long on Netflix for a really long time. So it's just more like, it's like I don't need it, but like I want it. I don't need to go long on Netflix, but because I've been wanting to go long on Netflix for so long, I couldn't. So I'm wondering, like, if you want to go long tomorrow and you place your stop here, we're talking position trading. We're not talking swing trading, day trading. We're talking holding for 6 months, a year. And your target will be some of these levels, right? 160, 150 or so. But you must give enough leniency, because even if this thing pulls back, you want to be able to give some time. You want to give enough space to work it out before going back up. I personally think I'm gonna wait, because I already have many positions that we're currently involved in, so I'm not gonna be hasty on it. I'm gonna wait for another pullback before going long. But again, it may not see that pullback. It may just keep going higher. Then I gotta let it go. I gotta let go. But Netflix looks really good. Netflix looks really good here. Any final questions before I let you guys go? Hold on a second. Why is this thing bothering me? Something is bothering me. This thing is not going away. Gosh. There you go. Gosh, there you go. Thank you. Thank you guys for staying in. 1 hour and 30 minutes. You know what's funny? Can I just talk to you guys? I'm gonna close this recording. Close the recording.